Take it forward with Shivendra Nigam. He's the CFO at Cantabil Retail India, joining us on the show to talk to us about their earnings as well as the way forward. Hi Shivendra, good to be speaking with you. Overall, the growth rate in the last year has been somewhere around 12 to 15%, if I have it right. Going forward, do you expect an acceleration in FY25 to, let's say, 15 to 20% kind of growth, or it's going to be largely between 10 to 15%?
Thank you. Thanks for calling us. Yes, last year we have a 12% of growth, to be precise. But overall, our target for a longer term basis is to keep this growth approximately 20%, right, with the expansion and other plans the company has. So we are sticking on that, and all the last year slightly on a same store growth was slightly on a negative side, slightly, but overall growth was there at 12%. So with the expansion, every month we are opening the stores, approximately 86 to 90 stores we last month opened. So the same, we are having a target of keeping a growth rate of 20% on a continuous basis for a longer term.
Right, Mr. Nigam, this is Vinny joining in the conversation as well. Since you were talking a bit more about expansion, that's what I want to talk about. In the next couple of years, what is the target that you have for your expansion plans, and what markets will you be targeting to see this strong growth, or, that is giving you the confidence about this growth?
So overall, we are sticking on our longer term plan. That is, last year we also approximately 86 stores. So the same plan is there for the expansion. For next 2-3 years or going beyond, we have a target of opening approximately 80 to 90 stores on an annual basis, 5-6 month stores, depending on the property we are opening continuously. So that is what the plan is for the company on a longer term basis. And yes, the market is, because we are mainly in a tier 1 Delhi NCR is filled, but we are continuously opening in that area as well. So mainly the expansion would be in tier 2 and tier 3 markets.
Tier 3, but coming back to the point when you said that growth this year is likely to be around 20%, what kind of margins will come with it? Because I'm expecting there should be some operating leverage as well. This quarter, there was a bit of a slip in margins to 22%. Do you expect it to head back closer to 25%?
Absolutely. If you have noticed, last year annual basis, we have registered 26% of our EBITDA margin. And that is on a downside. Before that, it was having 28 to 30%. So long, we have a target of making it to the 28 to 30% of EBITDA margin, because it is important. In our earlier commentary, we also said gross margin is important. So some pressure was there on the same store growth. Otherwise, gross margin we are maintaining it to our target level, and EBITDA margin is going to be maintained approximately to 28 to 30%. That's the target.
Itself, you'll reach this 28-30% mark, or this is a medium-term target?
No, it's a longer-term target. This year also we are hitting that. The last year the FY was just finished. We ended up with a 26% margin. We are very hopeful this year we will be back on track on 28 to 29% margin. And going forward, when we are talking about 1,000 crore revenue company next 2-3 years, and then making it to double. So 28-30% is the internal target to maintain the margins.
So 1,000 crores in the next couple of years is what we could also expect from the company in terms of the top line. But how do you see the overall average selling price moving, and where is that in terms of an increase, the trend that you see moving for FY25?
So growth rate is good. Last year, if you say, the March was very good in terms of growth. April was very good. May was a flatter side, because this is for the overall year basis. May is the most lean month. The hotness in the north side and marriages and other festivals are not there. But overall, we are increasing in our targets. So margins, pricing, everything is maintained on those lines. We are absolutely hopeful for this year and going forward.
Okay, point taken. And before I let you go, a quick word with respect to the online segments as well, because you have been trying to increase your presence through online channel. Talk to me about what's the strategy there. Are you looking at probably knocking on the doors of a lot of these e-com players, or are you looking at doing it organically through your own systems? What's the overall online and omni-channel strategy going to be like?
So we are there. We are there in all the leading marketplace players. We have been noted last year, we just started it, and we clocked the revenue of 2 to 2.5% last year. We make it 2.5x last year. FY24, we end up with the 2.5x. And this year, we are targeting to take this number to 6 to 7% of our overall sale target. So there is a continuous growth. And yes, all the leading market players were there onboarded. We are working very closely with them. As far as omni-channel is also there. So all the channels, own web, all the channels are on for the company as far as e-commerce is concerned.
Okay, Mr. Nigam, thank you so much, for joining in with us this afternoon on ET Now, talking to us about the outlook of the company in terms of the growth that we could expect in the next couple of years, as well as the margin trends. 1,000 crores revenue could be expected from the company in the next couple of years. Margin surely expected to see an improvement going forward in the medium term as well.
If you like this video, then like, share and subscribe to ET Now.